Ladies and gentlemen, it's me, NYC Einstein from the Flood New York Stock Exchange inside Verstoff. Nice to see you. Fed. What happened today? Middle of the week, second week of June. Got a big week coming up. Market's been an all-time high. It's been on a rip. What happened today that's different from any other day is we had the Fed meeting. We had the announcement of interest rate changes. There's been much anticipation of that. In the old days, when the markets were engaging a potential raise or not, over the last 7-8 years or more, raising interest rates, people have been coming out of the market. It's been of a sell-off. Lowering interest rates or keeping them the same has been positive for the market. Okay? Those rules don't seem to be working anymore. This market seems to not engage anything negative and stay positive. Why is it doing that? What we had today, which was fascinating, was so the market did a bob and a weave and a bob and a weave. I got to look behind me and see. Market opened at an all-time high. Then sort of engaged a bit of a sell-off trade. Today is Wednesday. It's gas and oil inventory numbers. 10:30, the oil inventory numbers. There was a bit of a pullback. There was not big inventories, but there was a low demand on gas. Distillers were a little bit elevated in inventories. Market started to sell off. We ended up having the yields went down. The dollar went down. People were buying bonds, safety trade. We saw oil reverse in a big way from down 30 to breaking 200-day moving average, and it broke down about $1.67. It's Wednesday. Market chose to engage that, and the market sold off hard. It was quick. It was hard. Actually, as you look at it, it was maybe 50, 60, 70 points at most. $1.25 sell-off in oil was significant, though. The rest of the day was still anticipation of the 2 o'clock Fed decision, right? The Fed decision is imminent. All afternoon, people were looking at that. But, anticipation, the bet was 80-20 that they were going to raise rates. And the market was just positive about it. The only thing, and in fact, they did raise rates. We're at a point and a quarter on rates. Still cheap relative to the rest of the world. Still basically free money. Okay? So that's why the market doesn't seem to be engaging in a negative way. What was significant was that we are seeing, so these decisions, as per command of Ms. Janet Yellen, are economic data-driven decisions. So we've seen corporate earnings were good, interest rates were low, market was all-time highs, net things looked okay except for the retail sector. Oil's been under pressure. That's the wide, expansive look of what's going on. But net, and with the uncertainty around the world, this market doesn't seem to be engaging anything negative, right? This market has potential with what's going on in England, what's going on in the Middle East, what's going on with oil, what's going on with Washington, with Russia, with FBI, and all this. This market has the potential at any other time in this nation to be down 1,000 or 2,000 points, but it's not. Okay? This market seems to just be on fire. What we saw happen on Friday, which I talked the other day, was the couple analysts. Look, we've had tech on fire, right? 32 daily all-time records since the election. That FANG trade on fire. That came to an abrupt halt on Friday. That forced people to start getting out of that tech trade and back into the oil and financial trade, the energy and financial trade. So what happened today? Markets rallied hard off the announcement of the Fed raising interest rates. Then half an hour later, they sold it off on the Fed minutes because the data that came out today on super weak retail sales, which was no surprise to anybody, forecasted that people were fearful that maybe there's not going to be another interest rate at the end of this year. So the market ended up, you know how these Fed days are. You and I have gone through a few of them. The reactions tend to be, look, for every buyer, there's a seller. For every aggressive buyer, there's an aggressive seller. For every time this market engages this Fed trade, everyone's got a different opinion on it all. So there was the first initial rally, the big sell-off. Fed minutes came out. And then you saw the market sell off hard. Okay, that was just basically buyers stepping away, sellers coming in, people wondering whether there are going to be more interest rate raises this year. And after the minutes came in, they decided, yes, there would be. So it's like a pull and a tug. It's like tug of war, right? the end of the day, market rallied back hard. We had sold off for over 150 points. We rallied back almost 120 of it. Market ended up closing up 50 points. Things seemed okay. Spiders off a little bit. Gold off a bunch. Market strong. We'll see what happens. Big day Friday. Big rebounces across the board. Net for a Fed trade day, this market ended up okay. Could have been down 150 points. It wasn't. Closed up 50. Seems strong. It's about all the analysis I can give. It's so confusing on these Fed days. Everyone's got a different opinion on it. I did the best I could. I love you all. We ended up 50. Spiders off a little bit. Gold off a bit. Oil off strong. But the market's still strong. Tech still weak. Dow up. I love you. Einstein out.